Focus to the sector which actually has helped the markets a lot, Infosys in particular, the IT sector, and how will 2019 pan out. To get a first peek into how orders will come from clients, Offshore Insights, the company, has surveyed over 400 IT and business decision makers across geographies. And we have with us Sudin Apte, Research Director and CEO of Offshore Insights, joining in to give us the key takeaways. Good morning, Sudin. Thank you very much indeed for joining us. Well, first up, in the three-quarter numbers, Infosys and TCS said that they had much more orders than they could handle, and that's why they had to subcontract some of the orders. Is 2019 looking better than 2018?
Yeah, so, I think 2 points I wanted to mention. So when you say 2019, you're talking about March end 2019?
FY20.
Yeah, okay, FY20. Right. So, unfortunately, I have a slightly bad news to share with your viewers about IT sector. There are 3-4 factors at the play which are putting economic pressures, and because of that, our estimate indicates that buying, direction in FY20 are going to be a little challenging. First and foremost, about 78% of respondents of our survey mentioned that they would keep the budget flat or slightly reducing the budget. We are not seeing large budget cuts, but we foresee that the budgets will remain flat. Point number 2, yesterday we heard IMF and in World Economic Forum the commentary about economic pressures, trade tariff. Because of that, large investments, new projects are not coming up, and almost 2 in every 3 respondents we spoke to mentioned that they will wait and watch. Point number 3, after a couple of years, we saw cost cutting coming on, forefront, and overwhelming majority of CIOs said that, the cost cutting is one of the important aspects for us. And this is very interesting because last 2-3 years, we saw a good amount of spend, on the growth there. Overall, we feel that this is a challenging year from, the buying direction perspective. So that's how I look at it, and compared to current fiscal year, we believe that next year will be at best at the same growth rate, but probably we will see a little lesser growth compared to current situation.
Okay. Then how do you tie in this third quarter announcement made by TCS and Infosys? Both said this is a great problem to have. We have more orders than we can service.
No, that's good actually. From a couple of providers' perspective, my numbers are about the overall industry trend and how we see clients are evaluating. We saw a few quarters up and down for these providers, point number 1. Point number 2, a couple of providers who contribute to a component of overall market may do well. I'm not saying that nobody will grow faster than our overall average. Okay. Obviously, when we say that, FY20 average will be 6% to 8%, there are going to be few companies who may do slightly about double digit or higher than the average, and the bulk of providers would be at an average 6 to 8% or lower than that. But very clear economic indicators that the demand will taper off as we get into the next fiscal year.
Okay, Sudin, hi, good morning. Does your survey also indicate that margins for the tech sector in FY20 will be lower than FY19 because of issues like the talent crunch in the US?
Actually, what we do during this survey, as Lata said, at the start of the segment, that, we go to 400 odd clients. This is more about client demand and what clients are looking for, what they will buy, what type of services they will consume, what business pains they are going to solve. So really, I can't comment on actual margin, but one thing for sure, I would say that, there is not going to be any escalation or a release of pressure on the billing rates. So billing rates will continue to be on radar of client for negotiations, and we believe that actually billing rates will come under pressure. Now, how currency will shift and what will be the actual realization rates for offshore providers, it's really not my area of expertise. So I would refrain from saying how actual realization will happen, but billing rates will continue to be under pressure in coming year because overwhelming majority of clients do mention that cost cutting is one of their top priority.
Okay. Will digital be a kind of a panacea that even if you have to cut other expenses, you have to digitize other operations? Will that be for Indian IT companies a business that will counter this downtrend?
That's actually one big section in our report about digital demand, as well as this is really, interesting point for Indian IT industry. Is this opportunity or is there a big risk there? And let me explain. I think point number one, client obviously are increasing their spend on digital, more so on a cloud, but also on analytics. However, what we are seeing for last couple of years and now more so prominently in a year to come is, instead of converting digital requirement into a services project, many clients are preferring off-the-shelf solution from a platform provider or from a niche technology startup or a company in the United States. So what could have been an ADM or application implementation project 3 years back or 5 years back, in a world of digital, while client demand is high and spend may be there, it may not essentially convert into IT services, leave aside offshore IT services. So, digital is very real, the growth is there, but it's not essentially converting everything in terms of demand into offshore IT services or ADM or, package app work. So we do believe that analytics will see some uptake, but areas like cloud actually are counterproductive for infrastructure management, network operating systems or network operating services, implementation of hardware services, etc. And few of the top service lines may actually, at a gross level, will take a hit as an outcome of broad adoption of digital. Similarly, mobility also has got good demand, but again, a lot of that getting commoditized very fast, and the ticket size for those deals is also reducing. So while digital from client spend perspective is doing well and growing, it's not converting into IT service.
All right, Sudin, thank you very much for joining us and giving us a peep into how 2019 or FY20 will look like. Actually, it's not a very pretty picture. That some of the clients have said that they will cut or they will keep budget steady, and digital also is no panacea. According to Sudin, margins too under pressure, billing rates could be under pressure is what he says. So the great news that we got from TCS and Infosys may be company specific, not an industry issue.